concerned about it, what those requirements are associated with it, give you a little ideas for some tools or a checklist that you might be able to create that will help guide you through the concept and hopefully reduce risk for your business, but also to build trust with our customers. So that's important. So the theme is kind of to know your customer is to love your customer, and it's about, it's appropriate that we're doing this on Valentine's Day. It's our customer relationships are or should be built around trust, so that's very important. And then we'll ask some questions about, does this apply to me? What's the applicability to my business or my situation? Look at some tools that you can use, some free tools or other services and tooling that you might use as part of this process. Then we'll talk about it. We'll answer the questions and kind of find out a path for next steps or where we should go from here. We'll learn about it and then figure out if we should do anything about it. So the theme of I'm going to do probably more talking than reading. I know these are a little word heavy slides in some instances, but they serve as a reminder for myself what kind of the highlights should be during this conversation about know your customer. But essentially what we're trying to achieve with the know your customer guidelines is to help us to better understand the risks that we face as a business owner or an employee or somebody who's tasked with managing risk in their enterprise, to understand what those risks might be and how they relate to certain customers or clients of ours or even other businesses. You've probably heard a lot about third-party risk management in terms of vetting the companies that you're doing business with you. This is related, but this has a little bit of the lens is focused on your customers or your clients, or there's the concept of know your customer's customer, which would be like in the case of boberdoo, we have hundreds of clients, but those clients in turn have hundreds or thousands really of partners that they're going to be doing business with using all sorts of tools, including but not limited to the boberdoo platform. So this applies pretty broadly, but the goal at the end is to have a mutually beneficial relationship. So as a business, you want customers and clients. You want profitable customers and clients. You want good customers that are going to do the right things. And in turn, they have certain expectations about your business. Your customers want to have a trustworthy relationship with you. Of course, they want to realize the value for the product that you're selling or that you're providing to them. And in the end, it's it can be a win-win. If you elevate the level of trust, then your business partnership will likely be fruitful and profitable and beneficial to both parties or all parties involved. So there are a lot of regulations out there. There are many security frameworks and best practices that companies are urged to follow. Many states, many countries have all sorts of different guidance, and it could be in the form of guidance or a self-regulating organization, but oftentimes it's in the form of laws and things that you're bound to. Know your customer actually has been around for a long time, over 10 years, the concept, and is related to several regulations that are most strictly applicable to the financial industry. So thinking in terms of, if you were a bank or a lender, you're providing a mortgage to a customer. Think if you've ever had a mortgage application, or you've done a refinance, something like that. Think about all of the things that your bank wants to know about you as a customer, in order to make a good decision, for them to extend you the credit terms that you're asking for, the amount of money that you want to borrow. So last time I did a mortgage refinance, it was dozens and dozens of pages and signatures, and collecting information about credit history, and diving deep into personal information. You have to give up your social security number when the bank is evaluating you. So what they're doing is trying to evaluate the identity of customers, and then in turn find out what the risks are associated in doing business with you. Banks were kind of bound to this via several different regulations, actually. Know your customer is not a quote unquote regulation, but it's directly tied to certain regulations. I think, like the U.S. Patriot Act and things like that. So the intent was to make sure that we are not bringing in customers who might be involved in money laundering, who might be on a banned list of known people participating in terrorism or terrorism financing, things like that. So that's where it comes from. It comes from banking, but it can be applied to just about any industry, because if you think about it, there is financial risk. If it just you're a business, there's always financial risk, and you want to keep that to a minimum. So for most businesses that conduct business online, there's a real risk of a data breach. A data breach is very, very expensive. So we'll talk a little bit more about that, but that's why it might apply beyond financial institutions. And in fact, KYC is bleeding to industries, as if you're involved in real estate, or you're involved in any sort of online gambling, or anything that's really transactional. What they're going to require you to do, or what the requirement is to, first of all, identify your customer. So who is it? Think of these as the identity basics, the contact information, which you most likely have and is known about your customers, but maybe not everything you need to know in terms of identification. And then once you kind of know those hard facts about who your customer is, name, address, contact information, website, things like that, you're required to do a little bit of due diligence to dive a little bit deeper and find out about your customers. Look for red flags of anything that might signal an elevated risk of doing business with the customer. If you have a customer that's under a contract, you want to make sure that they can pay their bills, is one example. If during that due diligence process, if you determine that there's an elevated risk or some red flags that you might need to investigate, then you'll go to the next requirement, which is enhanced due diligence. So then, if you think there might be a business risk here, find out more. What can you find out about this company that will give you this company or this customer that will give you some elevated level of comfort in signing that contract and doing business with them in the long term? Because ideally, it's a long-term, fruitful relationship with your customers. it doesn't end there, because you'll find that you'll have to do ongoing monitoring, right? So you can't just kind of collect this information and make an assessment, because things change over time. Circumstances change, companies get acquired, they do business with many other third parties. So it's you kind of need to move to this state of ongoing monitoring to keep an eye on that customer relationship and make sure that it's still a good fit in the long term. Okay, there we go. So with that being said, as part of the customer ID or identification process and the customer due diligence process, you'll want to look at certain information that you need to collect. Uh, Coming from a privacy sensitive industry, or many industries are privacy and security sensitive, and we've been told to not collect too much information for the sake of privacy, or limit what you need to collect, and that is still true. To It's a best practice to limit how much information you collect about individuals and customers. Uh, if it serves a business purpose, that's fine. That's generally what we said. If it serves a business purpose, you can collect it. If you think to banks and a credit application again, for example, or I'm opening a checking account, or I'm doing that mortgage refinance, or I'm doing something with health insurance, you'll find that each industry needs to collect the information that's relevant to them. So generally, it's not a good idea to collect health information, but a health insurance broker is going to need to do that. Generally, for many businesses, you don't need a social security number, but I guarantee the bank will ask you for one. So they can do those kind of background checks, especially if there's any significant financial or transactional impact that will happen from that relationship. So some things like business name, um, you'll have those during your customer onboarding. But does the business have any aliases or different names that it might go by, or affiliates that you'll hear throughout the conversation with them? Those can be very important. Location can play a factor. Of course, you'll want to have contact information like email and phone number. Absolutely. Um, uh, Location. Where is the company headquartered, but also where do they have their operations? Um, where is the location of the data that you're handling with your, in terms of partners and vendors, brokers, buyers? What countries are these operating in? That may be useful and relevant information to you, um, because then you're aware. Then you know that you may have a risk in certain countries, or you may not. It depends on if that is normal business processes for your customers. So it can be useful to know. Knowing that an organization, a customer has been in business for 20 years is fantastic. Like, boberdoo has been in business for over 20 years, so that lends a pretty decent reputation, and we know we can pay our bills and have successful client relationships. But then you may run into businesses that are startups or earlier in their journey, or haven't been around too long. That doesn't mean that there's a specific risk, but it's something that you should be aware of, and who these customers are uh, doing business with. What industries are they playing in, and what verticals do they operate in. So that's kind of like what I would say. The first column here is the first level customer identification. With that, excuse me, you can move on to take a little bit deeper dive when you're doing your due diligence and look at some extended factors like, okay, well, if my customer is doing business as XYZ, what does their online presence or their online footprint look like? Do they have multiple uh, domains that they're operating under? A lot of companies do. That's pretty common. What is their, if you look at their primary website address, what can you find out about that? You can do a domain reputation check and see if a particular domain maybe has a poor reputation in terms of sending out a lot of spam. Does their website have a privacy policy? Terms of service, are they presented clearly? Do they ask for consent? Are there other best practices to know that, to better understand how this company kind of views security, privacy, and most importantly, really the way they treat their customers? Um, do you have confidence? Can you find a point of contact for reporting security incidents that will give you a level of confidence that if in your partnership there is a data breach, that this company will disclose that, or this customer will disclose that to you in an appropriate manner? Or do they have any third party kind of verification, a SOC 2 uh, attestation, or ISO 20000, 27001? These are kind of security audit and frameworks that can be applied. There are self-regulating organizations, payment card processors might look at, be concerned with PCI compliance. Um, does your partner have cyber insurance? That's important. Most businesses should have cyber insurance nowadays to help manage risk for not only your business, their business, and any third parties that they are transacting with. Um, so I will a word of caution on collecting this type of information is that you don't want to burden your customers with gathering this information. A lot of it you will learn when you're contracting with a customer and you are doing onboarding. But you got to keep track of it, right? So you got to put it in your CRM, or make sure you have customer profiles available that can kind of keep track of this information for you. Other things like determining if they have a privacy policy or acceptable terms of service, you might want to take that into your own hands, not burden your client with numerous security questionnaires. I know that's a part of third-party risk management, pretty common. You might have received questionnaires about your business to reassure prospects that it's safe to do business with you. That's great. It speaks in terms of privacy. But if there are any of these things you can research on your own, don't put that burden on your clients to answer many questions. They may not have a level of trust after they go through this huge line of questioning with you. So I like to say trust but verify. So if you want to have a positive relationship with your customers, you should have that trust, and you can start here with your level of trust, but then you want to make sure. So there are certain tools. There's some URLs here. They're just kind of food for thought on areas you can look. So like if you were dealing with an online marketer and you wanted to know about if their domain has a reputation for spending or sending massive amounts of spam, a service like this Talos Intelligence, which is actually Cisco is the company, can do a reputation check on a domain. You could look to the Better Business Bureau and do a look up there, see if your customer is accredited. I think a kind of neat one or an important one is this FTC legal library, and you can use that to determine if there's any active, if there are lawsuits or litigation pending. I kind of poked into this library. I didn't find anything for Boberdoo, which was good. But I knew that Tesla was, probably the object of much litigation. So I punched in Tesla, and sure enough, it showed me the active cases that they're going through in terms of legal issues. So why might that be important? If you're interested, if you're signing on a customer and you're expecting them to purchase your services or purchase your data, that they're not also undergoing a bankruptcy at the same time. What's their ability to pay their bills? That's kind of the banking and financial angle again. And there can be all sorts of other issues going on that may or may not impact your business relationship. It's up to you to determine what's relevant, such as reviews. So if you want to kind of get a feel for the reputation of a customer, and this can be used for third party risk assessment as well. You can look up software reviews on like G2, service reviews on Trustpilot, check Google reviews. I will say kind of don't use reviews to make decisions. So oftentimes poor reviews are the ones that are most amplified on these review sites. So it doesn't tell the whole story. But my point is, it can give you a little bit of a sense of what conversation is happening about your customer or your third party that you're trying to kind of vet here. And the same with social media as well. Social media can be all over the board, but it doesn't hurt to take a look at an individual customer or a business's presence on social media, what they're doing. It can give you a feel for the conversations that are happening in the real world. So these are just tools that will give you indicators of where you need to look for risk, and then you can decide what is relevant, what applies to your situation. Now, is know your customer we'll say like a law that is impacting companies across all industries, all sizes? It's possible that it impacts your company. If you are a bank or in a related financial institution or financial space, the real estate markets, like I said, gambling, even not non-for-profits, even that are fundraising. If there are kind of financial implications there, then yeah, most likely these KYC rules are for you. And then as you get further out, maybe the rules that are tied to regulations don't strictly fit to your business. But I can guarantee you that if you have a business, a money-making entity, you're trying to be profitable, trying to increase revenues, trying to have good profitable relationships with your customers, that everybody across the board, if you're on this call, we can agree that minimizing financial risk is a good thing, because we don't, neither party, for example, wants to deal with the financial risk of a data breach or identity theft or other matters like that can drain a bank account or damage your brand, do brand damage in terms of dollars ultimately. So yes, know your customer is good for just about everybody, the concepts, but you'll have to take and tailor um, the approach to your business, to fit your needs and what's relevant uh, for you. So, but ultimately avoiding that, a data breach, it will save you money. And I think your customer rules or guidelines can help with that. Um, so kind of introducing Assumed here. So Assumed is our sister company at boberdoo. The minds behind boberdoo are the minds behind Assumed, but what Assumed is a platform that we have built into a product that allows you to vet customers, to verify data flows, and look at how customers are being treated and how maybe your clients are treating your customers. Are they committing to contacting customers only minimally and they're sending thousands of messages? Are they committed to not reselling leads and they're reselling leads? So Assumed is a tool that you can use to help prove that. The best practices are in place, that your customers and your data partners are doing what they should be doing, what they say that they do. And it, in the end, it's a way to monitor that risk. So full circle, know your customer comes back to managing risk. And ultimately, if you see value in following these know your customer guidelines, then you're going to reduce or minimize your risk or keep it to a level that is acceptable for your business. So that's kind of what KYC is all about. I know we had some kind of a few questions and discussion points that we wanted to hit on. So I think we can talk about that unless any of our panelists or participants have questions that we would like to answer right now.
Well, Dan, I think it's a good bit of information you've given there. There's no formal questions from the audience that we're seeing in the chat at this stage, but you're right. There are some questions that we kind of in the background have been dancing around here, and we can kind of look at some of these. I think one of the questions that in the list that I'm looking at is this something that is different depending on the region of the world you're in or countries? And are you talking in just a domestic United States context, or is there differences when you go to other parts of the world?
Yeah, the answer is yes. There are differences. So think of it as the U.S. has their kind of own things. There's specific U.S. regulations that know your customer as, but there are countries in Asia, in Europe, in North America, down to Mexico, but also South America. A number of countries have their own kind of guidelines around these practices. So I would advise, we are not lawyers here, but advise you to find out if you're doing business in those regions, what specific regulations would apply to your business. It's similar to GDPR. GDPR being the European kind of privacy regulation that just became the de facto standard for all countries in Europe, but also then the U.S. too, because a lot of U.S. based companies do business there. So needs to be considered. So think of KYC as being pretty broad set of guidelines, at least in terms of the way that I had discussed it. And then it could vary by country or even by state within the United States.
Yeah. In terms of other questions here, I guess I'll have to say that if you have any suggestions with regard to implementing some of these KYC how would you prioritize what you talked about in terms of a company wanting to jump into this?
Yeah, I think you would take, the three main concepts, customer identification, due diligence, and the extended due diligence as well as the monitoring, uh, and figure out what you need to do for each, what's relevant for your business. So in terms of customer identification, what is specifically relevant to your business? um, Due diligence. That's where you're kind of bringing in some tools, but I'd say my recommendation would be you don't have to go out and purchase some third party know your customer solution. Those exist, but first you need to document. What is it you need to know? Then you need to do your risk assessment, and then you need to figure out how you're going to approach onboarding monitoring or ongoing monitoring rather. So is that going to be a manual process for you? If you have a few customers, maybe that's okay. If you have many customers, and you need to do ongoing monitoring, you're going to need a solution. So not necessarily to plug Assumed again, but Assumed is one of those solutions that can help, kind of be a link in the chain or a piece to the puzzle in helping you do the ongoing monitoring and vetting. But it's all going to come down to your processes and what your business needs. A bank is going to be a lot different than many other companies, like a retail company or a data broker, because in terms of data, sometimes we talk about, the value is in the data. Banks is in dollars. To me, they're pretty equivalent.
Yeah, that makes sense. A question regarding companies that have done chargebacks. Do you know of any databases to research companies that have done chargebacks? Does that sound right to you?
In chargebacks, in terms of what is the question?
Well, the way that the question was phrased, is there a database to research companies that have done chargebacks?
Well, there are. I'm sure there are. I can't speak to that specifically, but I think you can find, those reputational databases that might find customers that do excessive chargebacks, or similar to, you can find, individuals that are excessive, like litigators, problem causers, fraudsters. So a lot of these reputational databases can help to identify those. Even something like the Better Business Bureau could potentially be a source of relevant information on that front.
That makes sense. Scott, I
And of
think you have
course,
some other.
yeah,
Yeah, Dan, I wanted to jump in on this. Chargebacks is something that can significantly hurt and has hurt our clients in the past. Boberdoo is not immune to it either. But a couple of things, like as far as like just a general database to look into, it would have to be something the credit card companies share. So there's not a general one. I think Dan would hit the nail on the head. You kind of have to approach it tangentially and see if that type of behavior shows up elsewhere. But I think some of the other things that Dan talked about help to, at least bring up or weed out some of those that might be the ones likely to do some unethical chargeback down the road. From a business and from just an operational standpoint, when you're using Boberdoo, there's a couple of things that you can do in there to control that risk. The two things that come into mind, one is to, at least initially, is don't jump right into monthly invoices. Invoice weekly, do a prepayment, or limit the credit that you are extending to the client. You don't have to give them unlimited credit from day one. And when you look at if they are paying with a credit card, The auto rebill features where you are billing them $500 every time their balance crosses over $100, you end up with more frequent standard amount transactions. And so those are, you have a payment history, and those tend, because the invoices are less big, they're smaller, and they're more frequent, you at least lessen that risk of chargebacks. So if you have other questions on the chargeback, we'd be happy to talk about it. You can just open a ticket or email us, and we can discuss that in more detail to your particular case.
Scott, do you think that there are any kind of payment processors that handle that a little bit better than others? Or is it because I assume the payment processors, they have firsthand knowledge of the reputation of customers, because they're on the hook for know your customer. Absolutely. So they may be doing some of their own due diligence, or certainly they do before it even makes it to us. I think we're a little bit, our hands are a little more tied.
Yeah. I don't know is the answer, the honest answer to that.
So probably
I suspect there's some like tertiary liabilities if way back in the day, one of the things that when boberdoo brings on a client and we have our own process for vetting a new client is that we have a page that we keep that is all of the previous clients that owe us money and did not pay us. And so we check against that internal to make sure that that contact or company is not coming back around, because they are higher risk if they have stiffed us once. And I think those are the type of things, along with the only thing that popped in my head, Dan, in your whole presentation that I do see that is trade references. So boberdoo gets requested fairly frequently on behalf of our clients. If they're working with a new vendor, perhaps that they send boberdoo a trade reference for payment history, at least in regards to our history with our client. And I think that that's a good thing to put in practice when you're bringing on a new lead buyer, is to get some references. They're all using some software. They're all, as companies, making some sort of payments to vendors, and having, if you request 3 references and they provide 0, or if you send out trade reference requests and the companies don't reply, that can be telling.
Yeah, I think that's a good point, in that you want to maintain that history of if you have a history with a client, you keep track of that payment history and any exceptions to that, and then if it's a new customer, then you might look to the trade references, and then I think businesses can kind of help out each other to avoid the potholes.
Okay. I think certainly want to give the opportunity to our audience members to ask any questions. If there's any on their mind, feel free to drop them in the chat, or even if you want to just unmute and open it up, we certainly would encourage that. But in the meantime, Dan, appreciate you taking the time to put the presentation together. I think I was eager to see where this was all going to go, because I'll say I'm not as familiar with the topic, but certainly have a better sense of it now. Looks like a lot of common sense goes into it with a little bit of strategy. So.
Yeah, thanks for letting me talk for longer than I anticipated I would, but this is a learning experience for me over the last several weeks, in kind of like researching and discovering about, well, this is it's a pretty solid concept, and if it can help us to have keep that risks to a minimum and elevate our trust with our customers and have mutually beneficial relationships, profitable relationships with our customers, then sounds like a good thing to me. I appreciate the opportunity to talk about it.
Well, good. Sounds like this is something where we all benefit if we just do our diligence here. So good stuff. Okay, I want to thank everybody for joining. I think we'll go ahead and wrap this up. If you do think of any questions that you'd like to have forwarded on to Dan, we'd be more than happy to do that. Send us a ticket or an email. And we'd be more than happy to get that answered for you. Otherwise, hope everyone has a good rest of the day. Happy Valentine's Day. And hope you all have a great week. Thanks for joining.